Welcome back, financial enthusiasts, to another episode on Dividend and Conquer. Today, we're diving deep into a topic that's crucial for every savvy investor: the world of Vanguard ETFs. You've probably heard of VTI, Vanguard's Total Stock Market Index ETF, VOO, the S&P 500 Index ETF, and VGT, the Information Technology Index ETF. These are among the most celebrated ETFs in the market. But wait, did you know there's a common blunder investors make with these funds? In this video, we're going to unravel this mystery and guide you on how to navigate it. But before we get into the nitty-gritty, let's conduct a quick experiment. Imagine you decide to invest in these Vanguard ETFs, splitting your investment evenly among VTI, VOO, and VGT. VTI boasts 3,824 holdings, VOO has 505, and VGT carries 319. At first glance, it seems like you've created a diversified fortress, right? Well, not quite. Over 11% of your investment is actually concentrated in a single company, Apple. Surprised? This situation arises because these ETFs track market value-weighted indexes. This means each holding's influence in the fund is proportional to its market cap. With Apple being a juggernaut at $2.75 trillion, it looms large in each of these ETFs, disproportionately influencing your portfolio. Understanding fund overlap. Let's unravel this concept of fund overlap. Using tools like ETF Research Center's Fund Overlap tool, we find that 501 of VOO's holdings, nearly 99.4%, are already in VTI. Logically, since VTI represents the entire U.S. stock market, and VOO encapsulates the top 500 U.S. companies, this overlap makes sense. But here's the catch. It's not just about the number of overlapping holdings, it's about the overlap by weight. This is where the true extent of the similarity becomes apparent. For instance, Microsoft holds a 5.88% weight in VTI and a 6.7% in VOO. When we calculate the overlap by weight across all holdings, we find that VTI and VOO are roughly 86% identical. This similarity raises a critical question: is it worth investing in both? Now let's turn our attention to VGT. This ETF shares about 98% of its holdings with VTI, but with a lower overlap by weight. Compared to VOO, VGT shares only 21% of its holdings, but again, the overlap by weight is significant. This analysis reveals that even with different ETFs, you might be unknowingly doubling down on the same investments. VTI or VOO, which one is best? The choice between VTI and VOO boils down to a preference between the entire U.S. stock market, VTI, and the top 500 companies, VOO. VTI offers broader exposure, including mid- and small-cap stocks, with a lower concentration on the top 500 companies. VOO, on the other hand, hones in on those leading 500, which are major market movers. To understand their performance, let's compare their index fund counterparts, VFIAX, VOO, and VTSAX, VTI. Both funds have exhibited similar returns over the past 2 decades, but the total market index, VTI, slightly edges out the S&P 500, VOO. However, in the more recent 10-year frame, VOO has outpaced VTI. This shift can be attributed to the meteoric rise of tech giants like Google, Amazon, and Tesla, which have significantly influenced the S&P 500's performance. So the critical question is, do you believe in the potential of small and mid-cap companies, or do you prefer to stick with the established titans? Personally, I lean toward the S&P 500, but the choice ultimately lies with you. Now let's focus on VGT. This ETF has outperformed many others thanks to its concentration in high-performing companies like Apple, Microsoft, and Nvidia. These companies have significantly driven up VGT's returns over the past decade. However, it's essential to note that VGT only includes companies officially designated as information technology, leaving out giants like Google, Amazon, and Meta. So what should you take away from all this? Understanding your ETF's overlap is vital. It's not just about diversifying your portfolio, but understanding the weight and influence of each holding within these funds. As we move into potentially different market conditions, this understanding becomes even more crucial. But why does all this matter? For the last decade or so, you could have invested in almost any index fund and seen growth. However, the market is changing. Historical data suggests that the market environment we've experienced may not replicate itself in the coming years. This shift underscores the importance of being well informed about your investments and their interactions. Let's explore a little deeper. Understanding these ETFs and their overlaps is just the tip of the iceberg. Let's talk about how to make informed choices in your investment journey. Consider risk tolerance and time horizon. Your investment decisions should always align with your risk tolerance and time horizon. If you're a long-term investor, focusing on broader indices like VTI might be more appealing due to their comprehensive market exposure. However, if you have a shorter time horizon or a lower risk tolerance, focusing on more established companies in VOO might be more suitable. This diversification strategy helps balance your portfolio against market volatility. The role of VGT in your portfolio. Now back to VGT. Its performance has been stellar, but it's crucial to understand its role in your portfolio. Given its tech-heavy concentration, it's more volatile than broader market funds. However, this volatility can be a double-edged sword. It offers higher growth potential, but also higher risk. So if you're comfortable with this risk and believe in the continued dominance of tech giants, VGT could be a valuable addition to your portfolio. Diversification beyond Vanguard ETFs. While we focus on Vanguard ETFs, don't forget the importance of diversifying beyond these options. Consider incorporating international funds, bonds, or sector-specific ETFs to create a well-rounded investment portfolio. Diversification is key to managing risk and ensuring your investments are not overly reliant on any single market or sector. The impact of market trends. Market trends play a significant role in the performance of these ETFs. For instance, the recent surge in technology stocks has greatly benefited VGT. However, market trends are ever-changing. It's essential to stay informed and adapt your investment strategy accordingly. This could mean rebalancing your portfolio periodically to align with current market conditions. The power of compound interest. Remember, investing is a marathon, not a sprint. The power of compound interest works best when you invest consistently over a long period. Even small, regular investments in these ETFs can grow substantially over time. So think long-term, stay disciplined, and watch your investments compound. Investing with a purpose. Investing isn't just about growing wealth, it's about achieving your financial goals. Whether it's retirement, buying a home, or funding education, align your ETF choices with these goals. Each investment should be a step towards realizing your financial aspirations. Finally, as we move towards the end of this discussion, let's revisit the critical question of fund overlap. Understanding the intricacies of VTI, VOO, and VGT is more than an academic exercise. It's about making strategic choices that maximize your returns while aligning with your financial goals and risk appetite. In the world of investing, knowledge is power. The more you understand about your investments, the better equipped you are to navigate the complexities of the market. And remember, the most successful investors are those who stay informed, adapt to changes, and invest with a clear strategy. As we conclude, let's reflect on this. How much do you think fund overlap impacts your investment strategy? Is it a major consideration, or do you find it to be an exaggerated concern? Share your thoughts in the comments below. Remember, financial independence is the ultimate freedom. Keep building, keep stacking those wins. And if you enjoyed this video, smash that like button, subscribe for more insightful content, and join us next time on Dividend and Conquer. Remember, we are not financial advisors, and the content presented in this video is for informational and educational purposes only. Always consult with a licensed financial professional before making any investment decisions.